traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. Now, Larry Pesavento.
Okay, looking good, Billy Ray. Feeling good, Lewis. I posted a chart of the April cattle to start off with, showing you that all of these patterns in April cattle are complete now at the 166 level. The high today was 166.10. And the follow-up to that is I put up the chart of the soybeans that we started looking at last week, if you'll remember, both soybean meal and soybean oil and the soybeans. Now, this trade has already started to work, and they're down substantially. $600-700, which is pretty substantial when you're risking only $400 or $500. But anyway, that's what we're watching. I show that to you to get you excited about it. Now, some people don't need that excitement, but other people need a little bit of a nudge, and that's what I try to do here, is to show you that these numbers, even though they don't work all the time, they work some of the time. Now, yesterday, if you recall, we were talking about the possibility that there was a rally getting ready to happen. And if you'll remember, one of the things that I brought to your attention was the fact that we were right at one standard deviation down there in the NASDAQ at 12,060. Okay, now we had one humongous rally today. I'll just bring it up to update you to show you, what we've done up through today. You'll see that you've had a tremendous rally coming off of that number. But what we need to do is we got to find out, what are you expecting to happen next? And that's what your job, as a pattern recognition swing trader happens to be. So that's what we were looking at yesterday. So what we had to do is we had to look at what we talked about here yesterday on the show. So let's get this up here to show you where we were. This is the E-mini S&P. I'm going to walk through each of the indices to show you how they all, we're doing pretty much exactly the same thing, to show you there's no mystery involved. You'll notice here that we were looking for an area right around that 4,028 to be a 382 retracement. Now, I want you to see here that you'll notice here that we have one bottom here, another bottom here, and you'll never guess there's going to be another bottom down in here. That happened a little bit later. Let me get this up here so you can take a look at it, and you'll be able to see it relatively clearly. And then you'll see what happened after that. And I want to get this up here, and then you'll see how these numbers, you have to pay attention, folks, because these algorithmic traders that are out there, they know what these numbers are. There's where we were yesterday. We missed it by a little bit. Then last night, we made a beautiful, look at this, 3 drives to a bottom pattern, just as perfect as could be, and the market rallies well over 60 handles, getting up to this level right here. And then look what happened. As soon as it hit that 382 again, bada bing, bada boom, down she came. Okay? Look at the 382 from the previous day. These numbers repeat. And when the market's bearish, that's all it's going to give you is a 382. Now, let's take a look at the second most popular of the indices. Let's take a look at the Russell. We're going to get the Russell up here and show you the same thing in the Russell, because I don't know what your cup of tea is, but no matter what you want to pick, they've got Earl Grey, they've got chamomile, they got all the tea that you want. There's your 382 in the Russell, folks. This is the second most popular of the stock indices. The third one, who wants to guess what it is? Well, there's Johnny in the back of the room holding up his placard card, and it says, the NASDAQ, Billy Ray, and by golly, you're right. You're right, Johnny, one more time. And now we're going to take a look at the NASDAQ, because the NASDAQ was the big daddy rabbit. Let's take a look here. If you remember yesterday, we were looking at that standard deviation number. Now what we're going to do is we're just going to look at it without the standard deviation and put a little bit of the old magic ABCD. And as you can see here, we have a 382, a 382. Then you have an ABCD market coming right up to here. You see this pullback right here at 382. You'll never guess what that pullback was last night, folks. Guess what it was? Exactly 0.382. And when that market went back below that, that's when all the trouble started. Let me get up here and I will show you what I mean here. And it just sort of lined up. And this was all happening right before your eyes. And if you were looking at it, it might give you an idea. We try to show you that these things, you don't need, look at, you make a perfect ABCD up here at the top here, 10 days ago. That's when the Fed was out there. Then, of course, you had the move down, the ABCD down, and then you went right up to the 382 today, went above it just by a little bit, and then making new lows now. What's that telling you is this market is not finished going down. And that's the whole key of learning how to do this stuff, because you don't know which ones are going to stop and which ones are not going to stop. If you remember, we really thought, and I'll get this up here because it looked like it was going to hold, and maybe it will, but it certainly doesn't look like it's going to. There was the big ABCD right down there. Now we went up and made a 382, and we're back below that number right now. So that's telling you that train has left the station, and if you're still long, be really careful here, because there was really relatively good news with the GDP was still bad, but not nearly as bad as they thought it was going to be. Okay, so that's it. And there was no inflation coming in, because the only thing that was up in the complexes today was heating oil, crude oil, and gasoline. All the others were, pretty much down. So anyway, that's what we're watching. And so this tells us that we have made some type of a pretty good top up here, and we're heading down. So what you want to do is to practice looking for the 382s so that you can see them unfold. Now remember, you always want to try to sell the weakest. So if you looked at the last of the 4 stock indices, which is the Dow Jones, the least fun to trade, because it's only 10 stocks out of the 30 in the Dow. But look at this. It takes out the previous day's high by about 50 points, and it can't even make a 382 off of the high that we made way back here. So that was the easy one to sell, and we've gone down 500 points from that high. So that's what you're really watching for, is to watch how these numbers move around those. And when they come in with ABCDs or 1-3-5 patterns, Gartley butterflies, whatever they happen to be, those are the ones that you want to pay very, very close attention to, because that's where the money lies. So what we're going to be doing tomorrow is going to be looking at an update on the soybean trade. We're going to look at the soybean oil trade, and also the soybean meal, and also the live cattle, to show you how these things line up. And hopefully you'll be able to attend the one-day session we're going to have on March the 8th, where we're going to be doing live trades like this. And our goal is to make money that day. I'm going to be doing a lot of teaching, because it's what I like to share this information that I've learned, because I think people can use it. It's not rocket science. Add, subtract, multiply, divide. Use a handheld calculator and a ruler and a pencil, and you can do it all yourself. You don't need any fancy computers. You really don't. So keep that in mind as we're looking at some of these things here today. Our guest today is going to be Michael Moore of Moore Analytics. He's a specialist in crude oil, heating oil, and gasoline, along with natural gas. He's got some great information for us. He'll be joining us at the break in about 15 minutes. So stay tuned for session number 2, 877-927-6648.
Currencies, commodities, and bond markets are as important as ever right now, with how they're driving the volatility in equity markets across the globe, which is why it's a great time to try out Teddy Kegstad's Tiger Forex Report. Teddy Kegstad breaks down the Forex markets every Monday using his 30-plus years of experience as a trading veteran of futures, Forex, stocks, and options. Teddy releases his weekly Tiger Forex Report every Monday morning with coverage of all the major currency pairs, including the dollar index, the euro dollar, pound dollar, dollar Swiss, dollar yen, as well as many more, and he also has weekly coverage of the crude oil market and the 30-year T-bonds, as they both influence Forex markets tremendously. When you sign up for the Tiger Forex Report, you also gain instant access to Teddy's 60-minute webinar archive he just hosted, Forex Strategies and Fundamentals, What is Behind the Tiger Forex Report. For all the details and to start your 30-day Tiger Forex Report subscription today, visit the front page of TFNN.com. TFNN, educating investors.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
Are you looking for a way to consistently add winning trades to your portfolio? Tom O'Brien is here to help. Tom O'Brien has been successfully trading markets for over 30 years. A frequent contributor to TD Ameritrade Network and CNBC, Tom O'Brien founded TFNN over 20 years ago to help educate investors just like you. Tom's daily market newsletter, Market Insights, is published every morning when the markets open to give you the competitive informational edge you need to succeed. These newsletters are packed full of Tom's advanced technical analysis and are geared to deliver comprehensive strategies for a successful portfolio. Get Tom O'Brien's newsletter, Market Insights, today and try all of our products and newsletters 30 days risk-free with our money-back guarantee at TFNN.com. TFNN, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Okay, folks, Mr. Z from the Tiger Den was fortunate enough to send us this chart from Jim Bartolioni that was on about a week or so ago when we were making this 382 ABCD pattern in the NASDAQ Banking Index. And as you can see, it was spot on right to the day, and the market has started to move off. Now, what's interesting about this, if you look at this, this is going to be really important because there's a possibility we could be looking at a 1-3-5 pattern if it gets any lower. So that's going to be the key to whether the market is going to be some type of a semblance of a rally, or that's going to be it. Now, much of the news is coming from the Fed, as you know, and they have all different people on there, the 12 governors that are there. They all have their own ideas. The ones that are not in jail, well, they never go to jail, but they would call it their hand in the cookie jar this past year. But those 2 dudes had to quit. Anyway, they just get different information, folks. If you think they're not getting the same information, you're being very naive. Here's what I'm looking at. This is the Treasury bond market, and we made a slightly lower. We broke the 124 handle again for the second time. Now, the key here is the 123.11. That's the 78%. It's the 61% retracement of the whole move way back here. Now remember, this is the 30-year bond. This is not as big as the Treasury notes. If we take a look at the Treasury notes, and this is why it's so important to watch them both, is because the notes should be the strongest, and in fact, they're the weakest. Now remember, the Treasury notes are mortgages, car loans, personal loans, credit cards. That's where all that interest comes from there. And you can see we're trading substantially below the 61. In fact, we came very close to the 78% level. So if this can hold and then we get some type of a rally, then that's it. And the quality of that rally is going to tell us, how people are going to have either risk off or risk on when they're looking at some of these things that they're paying attention to. That's all I try to do, keep it as simple as possible. I don't use people. One of the questions was people ask me, why don't I use oscillators and statistics and other studies like stochastics and Wells Wilder stuff, and it just doesn't help me because all I'm looking at is a pattern that gets me to point D or point C of an ABCD move, And if I get there, I know exactly where I am. Don't care about the stuff. I watch open interest when things are making new highs or making new lows. But that's all I'm really doing. I'm not doing anything really exciting that is hard to figure out at all. Now, one of the questions we had for today was about the natural gas, because, natural gas continues to be going down. For the last couple of days, though, it surprised a few people, and it's actually up a little bit. Not up a lot today, but it's up a very small amount. And that's the key that you want to keep in mind here, that, we're paying attention to that. So I think it's important that you keep an eye on it, because if you don't, these things might sneak up on you, and then it makes it a little more difficult to, get your share of the pie. And that's it. So I'm just watching numbers, and as the numbers unfold, that's what I'm trying to find out, is how they're going to unfold. It gives me an idea of what's going on. Now, one of the charts that I did focus on yesterday, of course, was I'm not going to go through them again, because we looked at Apple, we looked at Tesla, we looked at Amazon, we looked at Google, we looked at all of them, and they do have some semblance of trying to make bottoms in here. They haven't made them yet, but they could be getting very, very close to making those bottoms, and that's what you're trying to do when you're looking at some of these things. It's not rocket science to try to figure this out. It really isn't. And if I thought it was easy, well, it's simple. Like Mark Douglas said, trading is simple, but it's not easy. But let's take a look at one of the things on this natural gas that we had a gentleman call in yesterday, but for the first time in a long time, let's just get this up here, because the bottom's not in yet. It's getting close, but I haven't seen a bottoming pattern yet in natural gas. Here's the longer term picture. This is the weekly, as you can see here. So we've been down here for so many weeks in a row that it's the understatement of the year saying that it's oversold, okay? I think it's down like it's 8, 9, this is the 10th, 11th. This is the 13th week already. It was supposed to be down 8 weeks. Now we're 5 weeks past that. We went long at 286 thinking it was going to be a good trade, and it was good for about 20 minutes. And then right after that, we were stopped out at 276. I did not go short there, which would have been the right thing to do. But anyway, then it's continued down. We haven't broke the magical level of 2 yet. We come down to 210, but we're making some type of a bottoming formation. Now, the question someone asked is, how do I know it's a bottoming formation? A bottoming formation is when you have higher bottoms and higher tops. I don't care what time frame you're looking at. If you have higher tops and higher bottoms, you're in an uptrend. Let's switch our analysis over here to gold for just a minute, because we thought gold had a chance at 1845. It rallied up to 1849, and before you knew it, it made new lows today down here at 1825. And we know from just looking at ABCD patterns here, you can see there's your ABCD here that we had on Friday. Okay, here's the move down to 382 yesterday, the 382 today. New lows today. The ABCD structure on this says high probability of going down to 1810. So at 1810, we'll take a look at it to see what our risk factor is going to be at that point, because until it gets there, there's nothing there that's going to tell you it's in a downtrend. Look at this. Lower tops, lower bottoms. You're in a downtrend. If it's an uptrend, you have higher bottoms and higher tops. That's the definition of a trend. You have to tell what the time frame is, because if you ask long term, gold is still bullish. Short term, not so much. So you got to know what that time frame is when you're asking about what the trend is, because that's where the key lies. What is the trend of the time frame that you're looking at? Long term, short term, intermediate, whatever it is, you have to be able to line that up so that it puts everything in perspective. I'm going to spend a whole day doing that back here on March the 8th, and we'll have some fun doing it, and hopefully we'll make a few bucks. We've done very well over the last 4 that we've done. And so it's fun for me. This is one of my funnest days of the year when I do those. I do 2 a year, and I really enjoy it, because people ask questions and they get to see it. We're going to have Tom Hugard as our guest this month, next month on March the 8th, and he'll be spending some time with us. Usually when he gets in there, he'll spend more time than he'd probably like to, but with answering questions and stuff, we'll have him for probably at least an hour, and then maybe even more. So those are one of the things that we want to be looking at. Now, we had a question yesterday about Tesla, and I wanted to bring that up to you. It was about why was it important about the 382 pattern that we talked about yesterday? And the answer to that question is, this comes from someone named Neil up in South Dakota. And he said, why is it so important on that 382? Well, because it was 382 of the high of the stock. That's after the split. Remember, it had an 8-for-1 split, I believe. And so that's why it's so very important. The low down there where the big ABCDs completed, right there at 109, the low being 106, the market then more than doubled in price over the next 5 weeks. Doubled in price from 106 up to 220 and change, which was the 382 retracement. So that's why it's important. Stay tuned for Mike Moore of Mike Analytics. We'll be right back. More analytics. We'll be right back.
If you want to take advantage of this sector, now is the time to subscribe to my Gold Report. The Gold Report is a comprehensive look at the metals sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the Gold Report with coverage of gold, silver, bonds, the XAU, HUI, GDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the Gold Report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Okay, we're back, folks. I believe we have Mike Moore of More Analytics on the line today. Mike, how are you doing?
Good. How are you, Larry? Thank you very much for having me on.
Hey, it's our pleasure. We got 9 inches of snow up in the mountains here in Flagstaff today, so it's been a big storm. I had a chair fly out and hit the one of our windows here. Luckily, it didn't break anything, but it scared everybody. But boy, we've had wind and rain, and boy, it's been tough. So, tell us what you're looking at today, buddy.
I'm looking at 75 degrees and sunny, so you can come on over here. And
I love Tennessee. It's one of my favorite states. So please tell us what we're looking at. Start out with the crude oil and the complex, Mike, because you've nailed that right to the wall here recently, and we'd like to hear what you're looking at.
Okay. I'm trying to do share screen here, but it's not really. Okay, here we go. We'll start with the crude, you said. All right. So crude oil left a medium-term bearish reversal up in here a couple days ago. We've been rolling over. And then on the lower time frame, I think we've just completed this structure down from 80.78 downward. And I said we were looking for different exhaustion levels down below here. We just held this one right here at 73.82 with a 73.82 low. And we're bouncing into what I believe is going to be a bullish correction slash trend. So just seeing what I wrote this morning. Yeah, and I said we've held this, started to bounce. It has a minimum target of 76.22. So we have not quite hit that. Well, we got to 75.99. So haven't quite hit the minimum target yet. But I think this is just consolidation before heading higher. So this is one area of possible exhaustion here in the 76.14 to 47 area. More important area would probably be up here in the 77.82 to 78.30 area. So this is either going to be a bullish correction before rolling over and starting a whole new bull structure, a whole new bear structure, or if we break above this formation and this formation, we could actually start a new bull structure. So we'll just have to monitor these areas on the way up.
Okay, Mike, we got a question from one of our listeners, and that is, in the next 60 days, 30 to 60 days, where do you think crude oil could go to on the upside?
I'll be honest with you, I won't even try to guess something like that far out. It's just my opinions on the market change.
Okay, that's fair enough. I like that. I mean, I can go with you there because it's just a sophisticated guess, as we know. But that was a question. So please continue. We'll watch these levels.
I will address one thing. I mean, there is a major bullish formation up here. You know, if this happened to rally and get up through here, you know, that's up in the 79.5 to 79.62 area. Then that would project it upward another $5 minimum. But, you know, there's a lot of ifs, ands, and buts before we would even get up there.
Absolutely. So, I understand.
You want to take a look at the natural gas?
Sure, please do. They always love to hear your comments about natural gas. It actually had 2 up days in a row. They might have to change the exchange contracts on that stuff. It keeps doing that 2 days in a row. Holy cow.
I remember when I came in one time and the natural gas had gone limit up. For anybody who doesn't understand that means that the market, if it moves too hard, they'll stop trading on it. But it happened during a Globex session overnight, and the Globex guys forgot to trigger the limit up. So the exchange decided to make it a double limit up. It went double limit up when it opened up 1,400 ticks higher. And then came off about 700 by lunchtime. But natural gas was ticking in 100 tick increments at a clip. Yeah. Shows you how long I've been doing this.
Yeah.
Anyway, so the natural gas, just as a recap, I've been talking about this with you the past couple shows, Larry. We've been bearish from 844 for 647. And then the more major projection was from 499.30, which I said projected this downward 227 minimum, 470 plus maximum. We've seen over $3 of that. So we've got the minimum. You can see we've come off hard here. And I said in order to attain the maximum, it could take up to 3 months. So we're only 2 months into this. And if we got that maximum, that could take this down into the 150s. We'll have to see. But on a shorter term basis, we've been rallying past day or so, coming up to a formation in here. If we break above that formation, that's going to project this upward 390 ticks plus. And likewise, if we were to break up there and fell back down through it, that would be another spot to reshort the market. And just in general, you know, the market's been coming down steep and then shallowing, and the highs have been shallowing. So, you know, if we got to pop up, it might be the start of a consolidation phase. We'll have to see. And like I said, also, if we break above this formation and back down through it, I would short the market again and look for it to run towards these lows and probably lower. The other interesting thing in the energies is that the unleaded gasoline has a similar picture to crude in that it finished this pattern to the downside, held exhaustion here, and we bounced up into a bullish correction, and we're right up against this formation, which we'd broken below the other day. So this looks like it's in a bullish correction. However, the interesting thing is that heating oil and gas oil do not have a similar structure. Those look like they've come down here and they're starting in a bearish structure and broke below a bearish formation here and are sitting right down on another bearish structure. So if we break below this one, that'll be significant projections to the downside. And let's see here. This upper formation projects this downward 10 cents minimum, 21 cents plus maximum. We probably got about 8 cents of that so far. And this lower formation would project this even lower. If it was to rally up and take out this formation or this bullish formation, then that would change the picture. But what this has done is put some real pressure on the heating oil crack. Sorry, my dog is barking out there. I didn't know he was inside before we did the interview. So that's why this heat crack is really getting pushed downward.
Yeah. I was being interviewed once in New York on the Money Show, and a person had one of those what do they call those dogs? Not a seeing eye dog, a helping dog, you know. What do they call those things? For some reason, that dog really liked me. I don't know why, but he took off. He jumped up on my lap right when we were doing a live interview, and it was everybody got a big kick. I thought someone had set it all up, but it wasn't. It's just that I must have had a happy face because he just jumped up and tried to lick my face and stuff. It was funny. That's when I heard that dog barking. I'm thinking, oh my God, I know what that's like.
Yeah, no, should I let him out real quick or just stay on?
No. Hey, we're just friends having fun here. No, leave him in. He might even learn something.
Well, he may be, yeah. So the real picture in here, what the outrights are telling us is that the heat crack is going to go lower, which means that the heat is going to be weak relative to the crude, or the crude strong relative to the heat.
And that's one of your key things too, isn't it?
Right.
Okay, let's talk about that when we get back. How you look at that relationship, because that's really an important thing. We'll be right back, folks. Mike Moore, Mike Analytics, and his dog Lassie. We'll be right back.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
The technology around us is changing every day. With so much happening, it can seem impossible to keep up with all the information. David White's investment newsletter, The Technology Insider, is designed to give you all the information you need to understand the technology that shapes today's markets and tomorrow's future. David White has made his living staying on the cutting edge of technology. His weekly newsletter will give you specific recommendations for value tech stocks, as well as entry prices, target prices, and stops to set for each trade. Dave delivers his weekly newsletters every Friday with updates throughout the week. You can get the Technology Insider at TFNN.com for only $37.50. Sign up for David's newsletter, The Technology Insider, and get an inside look at everything the technology sector has to offer. Try it risk-free today with our 30-day money-back guarantee. TFNN, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Okay, we're back, folks. We're speaking with Mike Moore of Moore Analytics, and we're talking about the relationships between crude oil and heating oil and gasoline that Michael uses to determine market turns. And do you want to tell the folks what you're looking at right now, Michael?
Yeah, can you still see my chart?
Yes, sir. We're right on target. As long as you post them in there, we can see them.
Okay, so just as a little review, I know we've talked about this on past shows. But a lot of people, when they trade the energies, they just do it as an appendage to other things they're trading. They might be trading gold, and they're trading the S&Ps, and they're trading crude oil and natural gas because they're liquid. But not understanding what the unleaded gasoline is doing and what the heating oil is doing just takes away a huge amount of profitability for trading the crude or just trading those products. And for example here, this is the RBOB to heat spread, and this shows you the relative strength of the unleaded gasoline to the heating oil. And you can see, I said the other day that if we held exhaustion levels up here, this was likely to come off. Now this came off to the tune, as you can see there, like $4,400 per contract. That's, $4,400 per contract in under 24 hours is a pretty large move. And then when we broke back above this formation right in here, I'd said this morning that decent trade back above, would likely bring in short covering for 1,000 ticks. And 1,000 ticks in the products, you just do that times 0.42, and that would give you the crude equivalent. So that would basically be the crude equivalent of $4.20. And we are, we've seen $3.45 of that so far. So what is that really telling you? That's saying that if I was long the unleaded today instead of the heating oil against one of those exhaustion levels, I would have made $3,500 more per contract than if I was long heating oil. And then you look at the crack spreads to understand, the relative strength of those products to the crude oil. And how this really helps you trade the crude oil, if you only want to trade the crude oil, is just a reminder that the products lead the crude oil in price 85 to 90% of the time. So that's a huge leading indicator.
Wow.
Did you want to look at the S&Ps or the gold?
Yes, please. Yeah, S&P, gold. Both of those are very important to the folks here at TFNN. So please, let's do the S&P first, and then we'll do the gold.
Okay. Just as a backup on the S&Ps, we'd held exhaustion down below here, which I said would likely start a whole new bull structure. We've seen that bull structure play out quite nicely. Then we held exhaustion up here, extension exhaustion, and we've rolled over into a bearish correction. So the question is this a bearish correction before this thing launches into a whole new bull structure that could last for months? Or is this going to capitulate and keep coming off and this be a new bear trend? So I'm just going to jump to a higher time frame for a second. This is just the main structure from the highs of the market back in January 4th, 2022. You can see we had the structure down here, typical bearish structure, overlapping though, and then we went into a bullish correction. I've talked on previous shows of our minimum target was in here, and then a maximum target right up here. So this has definitely made a healthy bullish correction against this bear move down. And then the question is, are we going to start a whole new move like this to the downside from here? And that is a pretty good possibility. I'd said the other week that if we got above here, if we sustain trade above there, it could have started a new bull run, but we really haven't seen that. We've rolled back over down through it. So that gives the bull some cause for concern. And our real key here is, we were holding this exhaustion here this morning. We popped up, we're testing it again, and now we're testing this formation. The next exhaustion level is going to be right in here. That comes in at, roughly around a 39.5 area.
Okay. Let
me move my charts up. That's 39.49 even to 39.4750. And then the last final exhaustion level is down in here at 38.96 and a quarter to 38.9150. If we take that out, then the market's more in trouble, and then it warns it's probably going to run down to the 37.8850 area. And at that point, we're going to be, right now we're in the third stretch of this downward move, and that could be the third stretch in a 5-wave stretch down. So we'll have to see.
Do you do Elliott wave counting? Is that how you come up with these structures of 3s and 5s?
Sometimes. I mean, I'm not a dogged Elliott wave guy. I use them when they make sense. But, sometimes the market's
I understand, yeah.
Sometimes the market's not, it doesn't care what Elliott wave thinks. It's just doing its own thing. So, you use it when it's useful and it's apparent and clear. But I think Elliott wave is very, very useful. That being said, so how do you play something like this when somebody like me is seemingly speaking out of two sides of his mouth? Well, it could go up or could go down. Right? The reality is that's your reality any day of the market. But saying that this could be in a bearish correction, what you're doing is you're monitoring different exhaustion levels on the way down. You're taking a shot against them if you want to get long. You take off a part of your position to pay for your trade. Or make more than pay for your trade. And then if it comes out and takes out your position, okay, you haven't lost any money or maybe even made a little bit. And then you try the next level down. And then you try the next level down. But if you go through too many levels, then that changes the picture. This lower level would change that picture on an overall macro basis. And that being said, I got bearish from up in here on the break below here. Bearish below this line, bearish below this line, bearish below this line. If we get a decent break below here, I'll be bearish below that one too. So you have different lines that you're getting short below as you're expecting it to come off into this bearish correction, and then also monitoring exhaustion levels as it comes down that you're doing short-term buys against to hedge your shorts and to get long to make a little bit of money, pay for the trade. If it collapses through them, you put your shorts back on. You've made a little bit of money on the bounce, and keep doing that on the way down. But if one of those holds, you're out of your shorts, you paid for your long, and now you're on to something that starts to run, and then you can add on to it as it starts breaking back above successive formations.
That makes good trading sense, that's for sure.
Hope I didn't say too much to confuse people, but
no. You're talking like a trader, and they're used to hearing that. They hear me every day, and I say I don't know what's going on 99% of the time, and I don't really care as long as I can make $1 off of it. I'm not saying I want to predict the market. I just want to say, can I make a trade here? And that's pretty much what you're trying to tell us here, is that there's going to be different opportunities. And your comment when the gentleman asked what's going to be the price of crude oil 30 to 60 days out, and I had my tongue in cheek, and I wanted to say, I said that's extra, but nobody knows where it's going to be 30 to 60 days out. I'm hoping I can figure out where it's going to be 12 hours from now.
Well, to be fair with his question, okay, there are certain times where there are very big, significant projections. Yeah. Okay, so in here, this is crude oil, the weekly charts, right?
Hey, we got to pay a few bills, Mike. Stay with us. We'll be right back, folks. Yep. Mike, more analytics. We'll be right back.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Okay, folks, we're speaking with Mike Moore of Moore Analytics. And Mike, we have a caller from Oakland, California. John wants to know, John, are you on the line? Evidently, the question was called in. Anyway, he'd like to know if you use open interest at all in the analysis that you're using, either at highs and lows or intraday, or how do you, or not intraday, but do you watch it every day, or what is your feeling on open interest?
I don't. There's a lot of value in it. Commitment to Traders Reports has a lot of value in it. I just don't.
Yeah,
I
okay,
guess
that's good.
I'm concentrating on it's hard for me. So it's not something
I'm the same way. I'm exactly the same way. At new highs, new lows, I'll look at it. But other than that, I have to look at what the prices are doing. John, are you still on the line?
Yeah, I'm still on the line. Mm-hmm.
Did any other questions you'd like to ask Mike while we have him on here?
No, I didn't catch the way you look at that, Larry. When you go to those new highs or new lows, you're looking at open interest to see what?
So I want to see if it's going into new lows and it's not increasing, that means it's short covering. And if you go into new highs and open interest is not increasing, it means the market is topping. And that's what I'm looking at in cattle right now. I don't know if it's going to work or not, but that's what it's telling me. So if you don't have new buyers coming in on the highs, and if you don't have new sellers coming in on the lows, you're getting pretty close to a trend change, because this is where the money changes hands. When the buyers and sellers come together and one of them's leaving, you've got to pay attention to that. So it doesn't work all the time, but when you add it to a few other things, that's what I'm looking at. But every day
Understood.
doesn't mean anything to me, John. I mean, it really doesn't. But new highs, new lows. And I mean, like 7 or 8 day highs, something like that. I'm certainly going to be looking at that for sure.
Sure. I got that. I just wanted to clarify.
Very good. Thanks for calling in, John.
I really thought your guest was fantastic today.
Yeah, he is. He knows what he's doing. You still there, Mike?
Thank you. Thank you very much.
No, he does know what he's doing. And not only that, but he does a lot of different things.
Thank you very much, both of you. I'll hang up
thanks,
and let you finish
yeah,
up.
we'll have you again. Mike, we'll have you too. So hang in there, buddy, and may God bless. Stay on the green side of the grass.
All right, you got to jump off. I just wanted to address one more thing that they said, if you had a second.
No, it's time's up. They're off to commercial. Thanks, buddy.